Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como from Ireland, Como Lafoy. Let's get right into what the markets are doing today or what they did today. Canola was up another $2.08 today, closing at 682.30. Minneapolis wheat was down 3.25 at 607. Kansas wheat down a big 8 cents today at 550 and a quarter. Chicago wheat down 6.75 to 543.50. Soybeans or up, 4.25 at 10.50 and a quarter. Corn was down 4 at 4.79 and a quarter, and the Canadian dollar, which, as you could tell by looking at my screenshot, was just still trading at the time of this recording, just under 72 cents at 71.99. All right, let's talk about one of the major headlines today. I'm actually going to say that Reuters was probably one of the more neutral reporters of this story. White House would consider cutting China tariffs as part of the talks. It looks like the administration is changing its tone on the hard stance it has taken on the Trump or on the tariff talks with China. Today, both President Trump and White House Treasury Secretary Scott Bessent made comments to this effect. As I said, the Reuters article above is probably the most neutral of the headlines I was able to find. The ones I was able to find the most are using the words, words such as capitulation, U-turn, backs down, bends the knee, et cetera, et cetera. So the market is taking this as a positive step towards, I guess, what you would call, getting back to normal. The S&P 500 is trading just above the 20-day moving average at this point. Futures are above 5,400. I think the spot is just below that, 5,390 or something like that. So a good day for the S&P 500 and for the rest of the stock market, showing that the market is taking this as a positive as we move forward with trade talks. Just to be clear, there hasn't been any deals made by the Trump administration with any other countries. So, some of the criticism of Trump bending the knee is somewhat valid because, he hasn't actually changed anything other than, adding baseline tariffs and things like that. So there still is the potential, I guess, for a lot of volatility. But today, the market is treating this as a positive. The US dollar index, which had sunken considerably as investors had shed U.S. assets in favor of safer havens, I guess you could call it, which would be, gold has been seeing a big rally. Other currencies, the Swiss franc, the euro, things like that have been considered more safe haven than the US dollar. So the US dollar had lost a considerable amount of value. We kind of saw a bit of a rebound yesterday. Today, it took us back into 99 plus territory on the US dollar index, almost back to 199.76 at the time of this recording. What does that mean for the Canadian dollar? Well, it means that we took a little bit of a spill on the Canadian dollar at this point. As I said, it was just trading under 72. I think it got as high as 72.50, 72.60, something like that, yesterday or within the last couple of days. Anyway, generally speaking, Canadian farmers, we like to see a weaker Canadian dollar. It makes our commodities more attractive on the global market and tends to rally our prices. The lower Canadian dollar tends to help canola futures. Lower Canadian dollar tends to help our wheat and soybean and basis corn. If you book corn using a basis futures, disaggregate. Things like that. So the Canadian dollar being lower today is likely helping our cash prices here in Canada a little bit. All right, time to pay the bills here. We want you to subscribe to our insights. You can get our insights for only $99 a month. What does that include? It includes weekly market outlook. It includes our hot takes, which are sent out ad hoc as news affecting the market comes out. And it includes our daily market commentary as well in the morning, and as well as these YouTube videos, which are free. Free to anybody who subscribes to our YouTube channel. So if you haven't hit the subscribe button on the YouTubes, do that now. But all of that is included with our Insight subscription, and you can cancel anytime. So there's no major commitment on your part to do that. All right, let's get into some interesting charts on canola here. Here is July canola. As you can see, we kind of tested the previous high again. So this kind of 685 area has been tested a number of times now. We're just the high now, looking at the high here now back to November, but we still haven't kind of broken above this February high yet. We're starting to see some consolidation, which I talked about in the video yesterday. Um, so we could be in a consolidative mood here, or mode here for canola for the short, for the short period of time. I think that a directional bias will show itself eventually. I think there still is opportunity to move this thing back to these June highs at $700, particularly as we move towards the growing season when we tend to see stronger prices. Here's a couple of other things that are helping to prove that thesis a little bit. Here is spot basis levels for canola. They continue to rise. This I follow this from the Alberta Wheat Commission, or pdqinfo.com. So these prices are posted bids. It doesn't include specials or anything like that. Generally speaking, those are kind of reserved for the people who are on the text list, things like that. But what I look at this for is trends. We are making a new high this week. This index has kind of come in at minus 1930 or something like that. So we've broken the minus 20 basis level. What I've been seeing in cash prices is probably anywhere between zero or option, they call it, or plus fives, something along that range, or somewhere in between. Most of the crush and elevators will text out a cash price and then make you extrapolate what the basis is from there, which is what I kind of do to get to those 0 to 5 numbers. Still, I think this is positive. I think there still is upward movement potential in the basis for canola as we move through the growing season when you folks get busy in the fields. Overall, I think this is still a positive input to the canola market. One other thing I wanted to point out was the July NOV spread here. So that's been widening as of recently, touched about 30 bucks a ton spread between the July and the November futures. Normally there is a spread between the July and the November futures, right? Because the November is the new crop, July is the old crop. But what happens is when you start to see that, move significantly in one direction, it kind of signals that they're, particularly when you're seeing rising prices and a rising spread like this, that kind of shows that there is a cash market shortage out there. So elevator companies, crushers, et cetera, are looking for physical product, perhaps to, cover sales that they previously made. As I mentioned in some of our reports, the crush margin had spiked prior to some of the trade disputes and allowed some of that more profitable business to get done in the crush market as well. So now they're looking to cover physical. All right. One other market that I wanted to kind of showcase today is July Kansas wheat, or sorry, just Kansas wheat in general. This is the July Kansas wheat chart. Mentioned yesterday that it was kind of testing these old lows here from beginning and end of March. There was another low here put in December. Today it broke through all of those levels. So we made a new low and closed below this low. That is not a positive sign. If we kind of back that out into a weekly nearby chart, you can kind of see that this is a new low in the weekly chart back since 2022. So this is not a good thing. Crop conditions, although they are declining, they're still above average. The Russian crop is looking better. Still some risks in Northern Europe. But overall, the market is not concerned about the supply of wheat at this time, and that is showing itself in the Kansas City futures market. That is all we have for you today. Thank you for listening. Hit that subscribe button on YouTube if you haven't done so already, and we will see you again tomorrow.